Good morning, everybody. Welcome to the Flow Show. Friday, here at last, one day to the weekend, and we can all switch off and relax and go and do something stupid at the weekend. How you doing, Kay? What you got lined up to do stupid this weekend?
Good morning, Ryan. Good morning, everybody. Wow, big news of the weekend. We're getting a new fridge. Yeah, we've got
Food
those.
or for wine?
Huh?
For food or for wine?
Oh, yeah, food and drinks, mate. Not the wine one. I've got a good wine fridge now, which I inherited from my brother. Um, just Ryan, I just noted we are not streaming yet. Um,
Are we not?
no, it doesn't look like it.
We should be.
I don't see it on.
Okay, don't know what's happened there. Let's try it again. Unable to
There we
live
go.
stream to the custom service.
There we go. There we
It
go.
was there, is it?
Yeah, I think it's there now. Yeah. We are on.
Oh, well, I've just had that warning. Unable to live stream to the custom service.
I mean, well, it's on.
No idea what's
The
going on.
wonders of technology.
It must be Friday. I can't see it.
Yeah, you
Oh,
are. You're streaming me.
okay. We're live, everybody. We're live. I'm not going to start again. Those are in. Oh, there it is. Right. Let's give that a quick retweet. Don't forget to give it a retweet when you see it, guys and girls. Let's get more people in here on the show. Right. Anyway, let's get moving. Let's see what's going on in the world. Going to start with a bit of data out of China. We had some trade balance data, which saw their surplus dipping a little bit to 640 billion. The US dollar trade balance 90 billion, down, well, slightly down from the 90.45, but missing expectations there. Activity wise, a little bit flattish compared to what we saw before. Exports were expected up 3%. They actually dropped 1.1%. Imports were supposed to come in up 3.2. They came in up 1. So a little bit flat there in activity wise. No real change there. An actual trade surplus with the US was a little bit better. 24.76 billion versus 22.82 billion previously. So trade okay-ish, shall we say, over there. One thing they have been trading a lot is gold. They've added to their state reserves for the 12th consecutive month. So it's a whole year now. They've been lapping up the shiny stuff. Over in Japan, we had some household spending data, which was lower on the month by 0.7% and softer than expected on the year at 1.8% for September. So a little bit of softness going into that. We had PM Takaichi speaking in Parliament saying that Abenomics lost momentum due to the COVID impact, and that policy needed active investments for growth. Then she went ahead and filled her what's called her key economic panel with a ton of Abenomics advocates, as they call it in the press. So she's filled her coffers up with that. So is she looking to follow the path of Abenomics, maybe reshape it a bit in her own image, Kay?
Yeah, I would say so because first she said, recall, was it earlier this week? She said, "Oh yeah, Abenomics haven't functioned well," but now she adds the reason for it, which was COVID. So, the funny thing is, yesterday I spoke about this ex-BOJer Wakatabe, saying that he was an advocate for Bank of Japan to wait to hike rates, and less than 24 hours later, he's nominated to her economic panel. So. That is just showing us enough again. AIDA as well, or ADIA, or AIDA is also an advocate for more fiscal looseness. So yeah, I think she's confirming that we are heading into Abenomics number 2.
Yep. So we'll have to see how that shapes up over the months ahead. Right, what else have we got? Been a lot of data really out of anywhere this week. So let's hop over to for now to the Riksbank. Janssen says that October inflation is a little higher than expected. That's after those numbers came in a little bit hotter yesterday. But he says the overall impression is that inflation is easing. We got the Bank of England yesterday, and they left rates on hold at 4% as expected, though the vote went, as I expected, a little bit tighter, came out 5-4, which puts them very close to another cut. The statement itself was a bit more dovish than the last one, which I think does tee up the potential for a December cut. Obviously, some of that is going to be dependent on what mess, or more likely due to the mess, Reeves makes in the budget. But I think we're on for a December cut. Then there's some strange things coming out of Bailey. The statement, the second paragraph of the statement says that they judge that CPI inflation has peaked. Then Bailey was talking about inflation, says he wants to see more evidence that we've passed the peak. Well, either we're past the peak or we're not past the peak. Either it's peaked or it hasn't peaked. He still wants more. They always want more. He did say they're likely to continue to be on a gradual downward path for rates. He says latest inflation data was encouraging, but it was just one data point. He says it's clear from agents that the labour market is slowing. He says with every cut going further becomes a closer call. And he did say that the December decision will obviously include what they know about the budget. And then, again, a bit of a strange one. He said AI could be the next big mover in productivity. The fact that he's uncertain pretty much shows that they're already behind the curve as far as that is concerned. BOE's Lombardelli says slackening the economy doesn't necessarily mean rates will need to go below the neutral level. All in all, and I didn't even really look at the forecasts, bit of a nothing meeting, except, as I say, we are probably looking at a December cut, or we'll be very close to one. As per usual, all the banks had it wrong. Goldies now see a 25 pip cut in December. They were previously forecast no cut. UBS the same. Citi the same. So all those wonderful bank forecasts up in flames again. Kay, anything you took from the BOE apart from how bored Bailey was?
Yeah, yeah, how boring it was for us, right? I think they throw the door open for December, right? That is one thing. No, for the rest, not really a lot, because they don't really know where they're at. It's all about the budget, right? From now on, I would say the only thing that we can't forget is that in the actual facts, even though we have seen the UK yields now coming down, which is more important for traders and investors than really where the BOE is versus ECB, for instance, but it's still a relative high yielder. So that is something that we need to just keep in mind, that if we are like short sterling versus a low yielder, we are going to pay up every day. So but no, in the yeah, that's about it, mate. A bit of forced short covering in the sterling, perhaps, on the back of the standstill, and taking these yields into account, these differentials into account. But yeah, now I think the market is already looking towards the budget, which is going to be more than likely an even bigger event than even if the Bank of England may cut in December.
Yeah, absolutely. And yeah, we were looking at all that, what would happen in the quid after Bailey, and we did see it gaining a little bit, particularly euro sterling. It wasn't massive, but 10, 15 pips lower, and it went a bit more after that. Just all those who were bearish going into it, maybe needing to do a bit of covering.
Yeah, exactly.
Put euro sterling's back into the 88s. I would have liked to have seen it down to my little old zone, but we didn't quite get that far. But anyway, rather it go up than down at the moment. Speaking of the arch destroyer, Reeves. She's apparently, according to the Times, it's pretty much confirmed or rumoured to be confirmed that she's going to raise income tax in the budget. That's the big one everyone's been talking about. But apparently she's not going to go as harsh on savings allocations. This was something that she was going to try and force savers to put more money into the UK stock market by changing the allocations of what you can keep cash and what you can put elsewhere. I can't remember if I mentioned it yesterday, but she's also looking at taxing EV drivers per mile to add something to the coffers, just sort of offsetting some of the lower incomes from duties on fuel, petrol and stuff. Right, anyway, moving on. Well, sort of moving on. The FT is reporting that if the UK wants a relationship reset with the EU, it's going to demand that we start paying back into the budget as part of that reset, which will go down like a lead balloon. We sort of got a bit of NFP data yesterday. The guys at Revelio Labs put out a NFP number showing that the US lost 9.1 thousand jobs in October. To be honest, I've never heard of these guys before, but they're doing a bit of jobs work, it seems, and they've been doing so for a while. And with the market desperate for anything on jobs, that number flew around the wires yesterday. Not that the market did much with it, really. Fed's Goolsbeast says indicators show a lot of labour market stability. He says we should be careful taking payroll jobs number drop as an indicator of the jobs market. I don't know what else we're going to use if we're not looking at payrolls numbers, but there you go. It says he may be reluctant to continue the rate cutting cycle. It says a settling point for rates will be fairly below current levels. Fitzwilliams was on the waffle, nothing much note particularly on what he's up to, but he says the natural rate of interest is hard to pin down. He says model-based US neutral rate estimates are around 1%, but bond markets suggest a higher level, but he'd discount that. He also said the Fed may soon need to expand the balance sheet for liquidity needs. So that's not QE. That's just a liquidity measure they may have to do in a bit. Fed's Barr says progress was made on inflation, but there's still work to do. He sees a two-speed economy with wealthier households thriving. He says the low hiring part of the low hire, low fire environment may be showing some effects of AI adoption in some sectors. Kay, do you think he's a little bit early with that call, blaming AI for this stalemate in the jobs market?
Early? Meh. We've been talking about it already, so maybe not. Maybe he's on the money, you know. I think it's a real risk for not even a stalemate, destruction of workforce. I mean, depending on which category one's in, obviously, but yeah, I don't think he's too early for it. It's maybe time somebody sends a warning onto the waves about it, an official one.
Yeah, maybe. Yeah, I don't know. It does seem a bit early. I mean, you're not going to be cutting jobs in manufacturing or not hiring in manufacturing because of AI just yet. But
for the time being,
at least
for the time being, they may actually be creating workforce because they are building all those massive electric stations, etc., to fuel the whole thing. So yeah, maybe a bit early with the call, but yeah. And by the way, Williams and yesterday I missed the start of his comments, and then I only saw this 1% line of the neutral rate, and I went, what's going on here? Dollar is not to it, but he was clearly talking about the real interest rate, the R star as people call it. So yeah, it wasn't really the shocking comment that I thought that came onto to the wave by Williams.
It was late on a Thursday afternoon. Probably a bit brain fried from listening to Bailey all day. Yeah, well, at least Barr's ahead of the game, ahead of the curve, and looking at it, unlike Bailey. But anyway, that's another argument. Fed's Hamak says it's not obvious the Fed should cut interest rates again, given inflation. Bit of a repeat comment from her. Says it will take a couple of years to get back to the 2% inflation target. But she also said that current economic data does not warrant a rate hike. So we're all glad that's off the table. Fed's Mirren was out and about again, says, I expect we will cut in December, though he was less certain in other comments he made earlier this week. He says he wants to get to neutral in 50 pip increments, and says a lot of my colleagues want 25 pip increments, and a fair few of them don't want any pip increments. Didn't mention that, though. Fed's Musaleem says the Fed needs to lean against above target inflation. Monetary policy is now between modestly restrictive and neutral. The US Trade Department has moved the meeting to start discussing the USMCA to December the 3rd and 5th, according to official reports over there. I can't remember, Kay, when we were supposed to start up in September, but I don't know when the discussions were really starting in earnest, but it's been booted anyway.
Yeah. Was it September?
I thought they were going to start in September.
Could be.
Anyway, well, we're not getting anything till December, so no need to stand by our beds.
There's a lot. This Christmas is going to be cancelled, mate. I mean, there's so much going on in December. I mean, the expectations for the Supreme Court, USMCA, whatever else is going to be coming onto the table. Oh my God! I mean, I'm not going to buy that turkey early.
No, I mean, fortunately, it should all be done by the 19th of December, because that week of the 15th, it's all the central banks in that week. And anyone who wants to do anything after that, they can jog on. It's Christmas party time. Anyway, that's a month away. Mr. Trump says he won't announce any more tariffs while this court case is pending. He says we will need a game 2 plan. I think he meant plan B. If the Supreme Court case doesn't go well, he says we can do other things, but they're slow by comparison. And just in case anyone's looking at any weekend risk, the administration has said they currently have no plans to strike Venezuela and lack a legal case to do so. That's according to officials speaking in Congress. Not that I think that's hugely market moving, but they've already struck a few boats and whatever. But there's a difference between that and going in completely heavy-handed. So that risk might be off the table for a while longer. That's it. Anything else, Kay?
Banxico.
But I forgot Banxico. Yes.
Yeah. Well, yesterday evening I was looking at on my phone on the calendar, and I put in the wrong filters, and I said I was pretty sure Banxico had their meeting, but it didn't show. So yeah, they did. So they cut 0.25% as expected. The Heat voted against the cut as kind of expected, and so everything as expected, going neutral. Like everybody else, data dependent. It's just the case that they followed the move of the FOMC, I think, to a certain extent, as they were expected. And well, let's say that there's not a lot coming out of it. But perhaps if we want to really pick one needle out of the haystack, is not specifically announcing another cut to come. Things will have to fall into place. So maybe a little more neutral than dovish. Let's put it that way. But that's about it, mate. And I think, well, the market has been actually pretty mild for the Mexican peso, but then we look at the rest of the emerging market sphere. It's not too much different of what's happening in rand, etc., for instance. So yeah, ball back in the middle, I would say, and interest rate differentials remaining the same after all, after a week.
Yeah, thanks a lot, mate. Might be while we're seeing the MEX gaining, a few people getting into a bit of a carry while the cane's been kicked on the USMCA, whatever.
As well.
Yeah, but also the dollar's a little bit softer today as well around the grounds, but we'll look at that in a moment. I'll see your question, Michael. I'll answer that shortly. Firstly, we've got a bit of data out today. Canada jobs, we get no NFP, so it's all down to the syrup swiggers. Over there, we're expecting a drop of 5,000 in the employment change. We'll see whether that full-time employment switches around a bit. That was a big one last month, 106,000. I think that, well, just going on how volatile Canadian data, jobs data can be, that minus 5K might be a little underwhelming. There's maybe a chance that if it's a negative, it's bigger than that. Just based on that big gain last time in full-time employment. The unemployment is expected to stay unchanged at 7.1, but obviously we'll match that off with whatever the participation rate does, which came in at 65.2 previously. After that, it's flash numbers from Michigan, so the latest numbers there. We'll see what consumer sentiment is doing. Keep an eye on those inflation numbers as well. Anything else you're looking at this afternoon, mate?
No, I think that's enough, huh? I just see that speaker there, Elderson in there. I mean, if anyone is wondering, all the ECB members are saying exactly the same. So he's probably going to just put the tape recorder on and repeat the same message as all the others, that they are in a good place and they want to wait and see. That's it, mate. I think. Well. Is the shutdown a weekend risk? It's just because it's lingering, right? That it may do something ahead of the weekend, but I wouldn't really say, unless we get a surprise solution to it, that that's going to impact too much over the weekend.
Yeah. No, I think the only impact will be if they actually get something done. Then there's a bit of a risk of maybe a dollar rally, gap open Saturday night. But yeah.
I just see you don't have you don't have it on your filter either, but we do have the Mexican CPI coming out in about an hour. So
yeah, it keeps switching
for
off
those
this thing.
having Mex in the books, that CPI may be a small mover, because we are just coming out of Banxico, and if it comes out anywhere a bit far apart from where the expectations are, it may be a little bit of a mover.
Yeah, keep an eye on that. And just if this is handy, my mate Batesy, if you want to know about the list of Fed speakers, follow Mr. Trading Floor Audio. Every morning he gives a list of those scheduled speakers that are out. So there's a few out this morning, later on, and whatever. Oh, great, we got Miram out again later on. I'll be long gone by then. Oh, it's double pill as well, 12:15 and 3:15. So yeah. Give old Trading Floor Audio a little follow. We keep you up to date on those speakers. Right, let's have a look at what's going on. I'll jump to dollar MEX because I've already started buying up Michael. I've got a little bit, and I'm hopefully just about to get filled on me 53s. I had a bid in yesterday, then I got a little bit FOMO. Nearly went at 55, which I would have got a nice. Well, I'm on a 1 minute chart. Jesus wept. Catching K. There must be something in Trading View. They put you on a 1 minute chart like the Yanks.
No, you're changing, mate, because yeah, maybe that's American influence there.
Yeah, exactly. So yeah, I wanted to have a little nil yesterday, but never. I got FOMO, missed that nice little rally to 1866, but I've started buying now from 57. I was bid at 53, but I've just split the trade up now, so I've put on some little bits, and yeah, I've just been filled on my 53s. Yeah, Michael, obviously doesn't look good. It's coming back from a decent rally, but you know, if we're in this uptrend, this is the level I want to test, 1850. This could be it. If it bounces from there, then I would expect to at least put on another go towards these highs. But if we're breaking back under, there's several levels that we need to watch. We don't really look to be breaking this uptrend, and these lines are just for visuals. Probably until if we break in 1835, then that's potentially something changing. But if we hold 1845, 1839.40, then it should keep this pattern going, and we'll see what it wants to do. But yeah, I'm happy to give this 1850 a little go. See what happens. I'm not going to be risking a lot. I just don't know yet where I'm going to put a stop, whether I'm going to trade into these levels or keep it a bit tighter. You got any interest in this one at the moment, Kate?
No, because I was looking at it this morning, and I actually did when I did the basic text on our website. If you look at all those moves, you zoom out a little bit. It's really every move up and down is adding a line in that 1850 zone, and that means that we are trading around it, right? It really, I mean, I understand what you're doing, but it should be a relatively short-term thing, right? Unless we start to break above 1880, 1885, and on the downside, the same thing has happened on every spike down. It stops after 1.5%, 2%, and then it rallies back up. So for the more longer term, it's starting to magnet more than being directional. This 1850. So yeah, I understand the short term play. Medium term, I'm looking at it maybe a little bit different. Because it's still a 7.25% currency. If we don't get anything on USMCA before year end, you've got 2 months of maybe carry or so, and that may actually drag it a little bit, very, very, very slowly lower. Of course, if risk blows up, it's probably you're probably going to be doing all right short term, back up to what is it, 65, 70 or so.
Yeah, I mean, I'll take that all day long.
Yeah.
I'm not sitting here going, this is going back to 21 or anything like that. But I think we know this is a key level. I think whatever side we park on, then there is a chance of seeing a decent pullback or retracement of this whole big trend. Even if we get up to 1880s, I'll be happy with that. And if it does anything more, then so be it. Things have got to start somewhere. We had it in dollar CAD, the same similar picture. It was coming down, couldn't find a bid anywhere. Then just all of a sudden we started getting this, and then it was hitting its head. Then we got a break. Then we got a break here, and it just so big moves, trend changes, trend breaks, whatever, they have to start somewhere. And if all we do is look for the evidence where that may happen. It may happen here at 1850. If we get a series of support here, it's going to mark a bit of a bottom, I think.
Yeah. Hey, this is crazy. If you look at those both charts, I really had a vision there. I say it looks as if dollar Canada is doing exactly the same as the dollar mix, but it's already 3-4 months later in the process.
Yeah, exactly.
That big move lower, hanging around 130, up and down, above through 137, 130, whatever there, and then coming back to that 137.25, and then it started to go up. And if you look at dollar mix, we are at that process where dollar Canada was like 2 months ago.
Exactly that, mate.
Exactly the same. This is crazy. I mean, I didn't notice it yet, but that's a crazy picture.
Yeah, and it's just trading patterns. These patterns happen all the time, and when you get decent big levels like this, there's no guarantees this 1850 holds, and it could go through and something happens and whatever, and we break all the way lower. And all that will say is after 2 months we're back on the downtrend. But if it doesn't, if it can't do that, there's only one other way it can go. As I say, it doesn't mean it's going to shoot all the way back up to 21 again, but it could mean that we take a good chunk of this phase down, up to 19 before it then decides that's enough and wants to go down. So, yeah, I didn't get long as early in dollar CAD as I could have, but I still got long in now to ride some of that, and yeah, that's all I'm looking to do. But I'm not going to risk the house on it. If it doesn't hold here, fine, I'll probably get stopped out somewhere, and it'll be back to the drawing board. But it is doing that same pattern. It's stopped going down, and when you're in a downtrend, that's the first thing you want to see. Is it continuing to go, or has it stopped? At the moment, it's stopped, and it's stopped for the best part of 2 months. So maybe something's going to happen. Who knows? But you have to pick your levels, and you have to give them a go. And if it works, it works. If it doesn't, it doesn't. So that's the way I'm looking at it anyway. But we shall see. There's nothing guaranteed ever in trading. Right. What else shall we have a look around? I'll have a quick look at. Let's have a look at dollar CAD while we're on it anyway, because this is still in the hunt. We're saying this looked like a little bit of a pullback, nothing major. We hit that support right in there, that old 89 level. We've bounced. We got back above this, just this short-term noise. Let's put it on an hour. I'll make it a bit clearer. So this was just a bit of intraday support and resistance. We're back above there now, 08, 09. We're holding it. We matched the high yesterday, so that's a bit significant. It shows you that there's some good selling pressure up there. Now we need to decide what to do. Are we going to bounce off here? I think if you get another bounce off this 141, 08, 09, whatever area, that's going to take out the highs. And if we do that, then we're probably going to kick on up to the next area, which is a bit of a zone up here, or level up here in this 50 fib. So from 50s to 60s. So yeah, hold here. We're going to push up. If we break back under here, that might put some pressure on this level. And then we're going to see a bit more of a dip. This level is going to be important as well, 75, 76, because it was a bit of a break point. If we break in there, we might see a few more short-term longs thrown in the towel and a deeper dip. But otherwise, this phase still looking pretty okay. Still a bit long, so see what's going to happen with that one. Right, enough talking for me for 1 week. Mr. K, all yours.
Alrighty. First, let's have a look at the table. Let me just switch screens before I share. Let's see what happens there. Do you guys see my cable?
Yep.
You guys see the cable?
Yeah, I've got it there, mate.
Yeah, okay. All right, so what was been talking about already a few times, 131.40, and yesterday we had that recovery in the cable, and where did it stop? 131.41 or 42 was the high of the move. So this 131.40 is really shaping up as the level where some kind of decision needs to be made, right? I would say for as long as we are under there, it still looks fragile, especially that it stopped again. It banged its head against the level and shied away from it. So that is really telling going into this Friday. But I would just be just a tad careful. We're actually seeing euro dollar is doing the move because that's supported by the euro crosses. But it just beware if it starts to move above ahead of the weekend, we could be in for a bit of a squeeze. Okay, but I would still, and maybe this is going to be important again for the start of next week. And but really, this 131.40 is shaping up as the decision level for the next move. Okay, so for as long as it's I mean, you can trade it both ways, really. If you want to trade it, it's banging its head against it. If we're coming back close to it, 30, 40, something like that, try a short, but be careful with your stop. I wouldn't, for this one, being Friday, I wouldn't give too much of a leeway if this goes through 50, 55. I think the squeeze may be on, for 132 or even 132.5 before the week is over. But this is now a big level, right? Euro dollar still in the downward channel, but this double low here, and then it banged its head against it on Monday as well. And then yesterday we didn't know whether to go through it or not. This one 15.40.45 now seems to start to give way. I wouldn't be surprised if we get back up somewhere around this maybe 115 three quarters up to 115.95 or so. If we break through 116, this could really squeeze as well. But will we have the power to do so? I'm not 100% sure. Although the euro has a bit of a double function here. First, the euro is we having that Challenger report yesterday. Then we had still negative news surrounding the shutdown, which is already bearing in mind the euro is the second big block. So if you don't want to own the biggest block currency, you jump onto the next one. So that is one reason why it's been resilient. The other one is clearly the euro crosses. If you look at all the most of the euro crosses, they're bid because there's some form of safe haven going into the euro. Traditionally, euro commodity, euro sterling, they are relatively bid when we trade risk off, and we've seen the equity markets taking a dive yesterday. That has put that bid under the euro crosses as well. So there's a bit of a double tailwind going on here for what the euro dollar is concerned, and I would not exclude that we are going to have a look at this upper end of that channel right now, which has been coming gradually down, of course. But I wouldn't be surprised if we end the week without positive news on the dollar, closer to 116 than 115, really. If it all turns around, or if we get some really decent news for the dollar, I wouldn't think that Michigan, because that's a bit of a communicating vases data dump, right? The consumer is happy when inflation is coming down, but he's unhappy, or she's unhappy when the inflation expectations are going up. So I mean, is it really, which are we looking at? The consumer happy or not, or the inflation coming down or not? So I mean, the Michigan is always a bit of a difficult read at best of times, and today with the rest going on, perhaps it's not going to impact too much on that euro dollar. So yeah, I would say it is possible that it continues to push through, but again, looking at what we were talking about earlier in the week as well, option vols are coming down and they are still very low. It's more going to be a grind than really a jump, in my opinion. Okay, but this is kind of the way I'm looking at the euro dollar right here and now. Yeah, Aussie and Kiwi. We have to look at both. Okay, that Aussie. Yesterday we were closer to that 65-20-30 again. It's really shaping up as the gateway to higher levels. We had other different levels before, but it's been showing up time and time again. So, and we failed again to get above it, and then with risk coming off, commodities coming off, equity markets coming off, it is a risk currency, right? And it really got a slap on the head. If you look at the euro Aussie, it's more violent, and there you can see the difference between what people trade when it's risk on or risk off. Usually when it's really risk on, you would see the euro Aussie come down, but euro Aussie really rallied sharply yesterday, and the result of it is this Aussie. I'm extremely neutral for what Aussie dollar is concerned right now. I'm just watching the levels. If and looking at the equity markets, they're again not feeling well. I would suspect that this is going to put a brake on the Aussie for moving back higher, but all depends on how the dollar will react going into the end of the week. But if really the risk off plays a bigger part in what we're seeing, we could be in for a little bit of a retest. Looking at the rest of the dollars, I'm not sure whether this thing is going to go down all the way down here, but it's really shaping up, and this is a bit of a more medium-term trend line. If ever this comes into the 64 and a quarter, and then we have the 38.2 as well of the whole 2025 move, which is just above 64. So 64.05, 64 and a quarter. This is going to be now a very important level as well if the Aussie would continue to fail on the back of lower risk. Okay, so I'm neutral. I'm not saying we are going to get there by any means, but if ever we get there, this is one that is worth putting on your pad now, on your little post-it on the side of your screen. Big zone here in the low 64s. And then we have to continue to talk about the Kiwi. That is really still very, very, very weak. Ryan also put the Aussie Kiwi up in our room this morning. It's just continuing to trade higher. Why? Because the RBNZ is complaining about low growth, etc., and we're seeing it in the numbers as well. They are really not happy there, and that is just continuing to weigh on the Kiwi, which is going to need a much brighter economic risk picture to really start going back up. It can, and the date will. It's probably going to go faster than the Aussie, but for as long as this goes on, I wouldn't touch it with a stick, especially not trying to catch the falling knife right now, because the Kiwi still looks very, very, very weak. The picture will only change if we start to move back above this. Well, start with 56, 70, 80, but then especially 56, 95 figure. Before that gets taken back, I wouldn't even start to think about a deeper recovery. Ali, you're doing a bit of a one-man show in your requests, right? Again, you should come and join the room. We talk about all that stuff all day long. No, I'm not on the right one. Dollar yen. We went a bit lower here, a little bit of a support building, fresh support building. We held right there. It's yesterday we had a big move on the back of risk, okay, and then Takaichi came up with her nominations, and the dollar yen recovered. I'm not trading dollar yen right now, but the only thing I can say is that I'm on the back of what Takaichi is doing. I'm still in this same mood to say that yen strength is likely going to find sellers in yen than buyers in dollar yen, or buyers in any cross yen, for instance. I prefer to look at the euro yen. Is likely going to find sellers in yen. So yeah, this could be still recovering a bit, depending on what the dollar is going to do this afternoon. But beware of the risk picture, right? Because yesterday it was really trading on the back of risk, this dollar yen. So it could retest this 152.80 in my opinion. And then last, before we go, where I was looking at a wedge earlier in the week, it's just morphed into a triangle, this gold, right? And we just tested the upper line again. I'm kind of expecting more of a yo-yo, but yesterday when it was looking so offered, it actually respected the Asian low bit and the prior low as well here. It respected it, and Asia actually bought it again overnight. So we've had this news about PBOC adding to the gold reserves for the 12th consecutive month. It just shows us that the Asians are still having an interest. And I was actually half surprised yesterday with risk coming down so hard that people didn't find more refuge in gold than they did. It just went down in sympathy with risk. But I would say I'd still be rather a dip buyer in this than a rally setter for now, just based on those risk factors. But just note, and I've been saying it since end of October, beginning of November, we are still in the bigger range, okay? So whatever happens here is just a yo-yo for the time being. And with that, Ryan, back over to you, mate.
Thank you very much, mate. Good stuff as always this week. And that brings the show to a close and the week to a close. I hope it's been a good one for you. We've made lots of pips. If you haven't, and if you need any help, you know where we are. Come and tap us up. Come and join the chat room. There's no sales on at the moment, but you can come in for 10 days for $1, which you can't even get half a pint for that these days. So very cheap. But come and see if we can make a difference to your trading. On that note, have a great rest of your day. Have a wonderful weekend, and we'll see you all on Monday.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.